Hi, I am Jasmine Baker, and this is my first Giving Voice to Values presentation for Accounting 6650 with Dr. David Christensen. For this presentation, we have been asked to analyze a case study. The case study I have chosen is taxes and the cannabis business. In this case study, Haley prepares a tax return including 100% of all cash income for the client. The client is very upset and would like her to withhold or not report 25% of the cash income. Harry, Haley's manager, asked her to consider this request as this client could bring in a lot of financial revenue in future services. No decision is made, and Haley is to meet with Harry and the partner on Monday to make the final decision. As we consider what Haley's thoughts are, we'll have to consider some social pressures as well as organizational pressures. Social pressures she may be feeling are like from creditors or investors that have the right to accurate information so they can make informed decisions in the future regarding this company. She also has some social pressures from accounting standards and to uphold GAAP as well as federal regulations. But then again, we have some organizational pressures. She has loyalty to her firm. She wants to do what's best for the firm and help the firm grow. We also kind of get into cognitive dissonance. There is an easy, comfortable, or maybe least discomfortable situation where she can just agree with Harry and the client and do what is asked of her. It will be good for the firm and it will be good for Weeds R Us, the client. However, the hard choice with the most uncomfortable options is to disagree with Harry and stay true to her values and continue forward with reporting 100% of the income. This could possibly cause her to lose her job, which is going to make this a very uncomfortable situation and decision. Some arguments that Harry may make as she meets with Harry and the partner are that this is standard practice in this industry. This is how many firms do it, as well as many companies in the industry do it. They have to work with a cash basis, and it's easy to make these adjustments. Another thing is locus of responsibility. Basically, Harry is telling her to do this as a direct order. He wants her to do it. It's coming from a superior. She may feel the need that she needs to do this. But then some locus of loyalty will also come in there, as we can see with organizational pressures, as she wants to do what's right with the organization, but at the same time, she needs to be loyal to the public and to the creditors and provide accurate information. Some of the key parties that have a stake here are, of course, Haley. She can lose her job if she doesn't go along with this request. We have Harry, or the firm, who's going to lose business and revenue if they go along with Haley's tax return. We, of course, have the client, who may be unsatisfied if they proceed with Haley's tax return and just going to move future business from this firm. Then, of course, we have the public, who has the right to the correct financial information. Some levers that we can use in our arguments is to explain to Harry and the partner that just because it's standard practice in the industry doesn't mean that we have to follow that. That we still need to follow GAAP and federal regulations. We can't not do that. We can also convince partners that it could be embarrassing if this gets out in the financial industry and we are known to have flexible accounting practices. Another thing is to remind Harry and the partner that, again, they're CPA licensed accountants and they need to present and uphold good accounting practices. So we'll want to address these arguments and speak with Harry and the partner about the cash standard and let them know that it doesn't matter if it's cash standard. We still have to abide by GAAP and the rules that are set up for us to follow. We also want to explain that although that's 25% may not be a big deal and no one will know, we still, as CPAs, have a vow to act ethically and report the correct information. And then finally, Haley can try to convince the partners that making this decision in the short run is going to be good for revenue, but in the long run could have negative effects on the reputation of the firm. And as well as her career, she could have criminal charges pressed against her for fraudulent activity.